0.7% and life sciences and healthcare degrew by 0.8%. Manufacturing degrew marginally by 0.1%. TCS banks and products and platform continued their growth momentum. Our customer metrics continue to remain resilient. The number of customers from whom we make more than 100 million rose by 2 to 64 customers on a year-on-year basis. In addition, our customer base of 1 million stands at 1,332, an increase of 38 over last year. We had a very strong order book closure again this quarter. Our order book closure for the quarter stands at $12.2 billion. This is the second highest quarterly order book and does not include any mega deals. Our order book for North America stood at $6.8 billion, for BFSI at $4 billion, and consumer business at $1.7 billion. Most geographies and business groups had strong order book closures. By the end of Q4, our net employee count stood at 607,979, a net increase of 625 associates. Our IT services attrition stood at 13.3%. We are seeing significant traction for GenAI and Agentic AI services and solutions across industries and markets. Over 580 AI for business engagements were delivered or in flight during this quarter. We are investing in Agentic AI form with 150 plus solutions across finance and accounting, supply chain, sourcing and procurement, HR and customer experience to enable customers in their journey towards autonomous GBS. We also enhanced our Wisdom Next 2.0 platform to offer agentic capabilities. The new features will enable faster onboarding, centralized governance, enhanced security guardrails, and a wide spectrum of pluggable solutions to accelerate innovation. For a global financial services major, we are using a combination of GenAI and TCS Mastercraft to migrate over 50 million lines of COBOL code to Java. In Q4, we applied for 267 patents and were granted 235 patents. Coming to full year commentary, our revenue for FY25 stands at 255,324 crores, 2,55,324 crores, representing a rupee growth of 6% and USD growth of 3.8%. On a constant currency basis, we grew by 4.2% in FY24 compared to 3.4% in FY24. Our operating for the year is 62,165 crores at a full year operating margin of 24.3%. Our net profit for FY25 is at INR 48,533 crores at a net margin of 19% and a full year EPS of INR 134.19. Cash from operations stands at INR 51,426 crores, which is 105.9% of the net profit. For full year, UK grew by 4%, Europe was flattish at 0.7%, and North America degrew by 1.8%. India grew by 62.6%, LATAM by 6%, APAC by 6.8%, and MEA grew by 11.2%. Among the verticals, banking grew by 0.7%, consumer business by 0.3%, manufacturing by 2.9%, and energy, resources and utilities grew by 5.1%. In FY25, life sciences degrew by 1.6%, technology services by 1.3%, and comms by 9.5%. The board has proposed a final dividend of Rs 30, bringing the total dividend for the year to Rs 126 per share. As all of you would have noticed, we also announced the appointment of Ms. Aarti Subramanian as the President and Chief Operating Officer and Mr. Mangesh Sathe as the Chief Strategy Officer. Both are well-known industry veterans and bring immense expertise on helping businesses adopt new technology and consulting. We welcome Aarti and Mangesh into the TCS family. With that, I hand it back to Kritika and we'll open it up for questions. Back to you, Kritika.
Thank you, Kriti. We'll start, as always, Reema Tendulkar from CNBC TV 18.
Gentlemen, good evening. So, Kriti, first question is for Q4 and FY25, if you could just tell us what was the growth X of BSNL? Could you put that into numbers? FY26, how will it compare versus FY25? And also, given the macro uncertainty, Are we seeing deal cancellations, ramp downs, or pauses? If yes, what's the extent of it and in which sectors? Samir, if you could explain the margin performance, 24.2 versus 26% on a year-on-year basis. That's a sharp decline. And next year, do you think margins, you can do better given the low margin deal BSNL ramps down? And Milind, on wage hikes and hiring. Thank you.
Rima, as I mentioned, overall, while we had a degrowth of 0.8% on a sequential basis, all the major markets grew. Most of the industry verticals grew. Our international business had a positive growth. Okay, I will not be able to call out what is the extent of BSNL degrowth here. What would be international business growth?
So international will be approximately sequentially, right? 0.6%.
0.6%. Okay. On last quarter also I mentioned that we said CY25, we expect this to be better than CY24. We still believe, based on the order book that we have announced and kind of deals we have signed, while there could be some short-term uncertainties, FY26 would be a better year than FY25. Okay. On the business, overall business environment, while till February we were quite positive and we were seeing very optimistic about the quarter, we started seeing some amount of some uncertainty creeping in March and resulting in some project delays, some decision making delays. We have not seen any major project cancellations. There are some ramp downs here and there, but there are some delays in decision making, and that's what we observe at this time. And as I said, we believe that maybe over the course of next few months, this uncertainty should settle in, and we should be back to business.
So Rima, from a Q4 to Q4 margin perspective, I think TCS was the only company who probably gave a full cycle of increments and also did merit-based interventions regularly through the period. That, as well as combined with investments in capability building, in our infrastructure expansion further, is the overall impact which we are seeing. Sequential basis, the margin impact was 30 basis points. Also, merit-based interventions or tactical interventions which were done through this quarter sequentially. You asked about FY26, absolutely. So first, our overall guidance range, or the guidance beacon which we call it, still remains at 26 to 28%. There is a gap, and given the current environment, there might be some impact on the operating leverage, maybe because of utilization taking an impact. But overall, the operational levers which we have been talking about, whether it is in terms of pyramid, utilization, and productivity, still remain, and we believe that should enable us to get through. Also, uncertainty provides an opportunity, and we'll use this opportunity from a cost optimization perspective as well.
Can you explain the tactical interventions on margins?
Sequentially, the tactical interventions were about 100 basis points.
And what were they?
They were mainly linked to promotions, merit-based promotions.
Rima, the hiring, we have onboarded 42,000 trainees in FY25, and FY26 number will be similar or little higher. Regarding wage hikes, considering the uncertain business environment, we'll decide during the year when to make that happen.
Thank you. Next question from Sajid Mangat, NDTV Profit.
Hi, Kriti. give us a sense of the discretionary spend environment, because when we spoke in January, you spoke about being optimistic about that. As we sit in April and the kind of global turmoil which is happening with respect to trade, and as a result of it, the derivative impact which is happening on IT and IT services, how do you see discretionary spend moving from here on? Samir, on the BSNL front, now that it's getting ramped down, what could have been the margin impact on your balance sheet of FY25 because of BSNL? I'm talking about, had BSNL not been there, the margin could have been higher by how many bips, or, and because of BSNL, it came down by how much? And Samir, on a year-to-year basis, the numbers are almost the same, 6.01, now 6.07 lakh employees on a headcount basis. Is that the level that you will be maintaining, despite the fact that you're mentioning that you will take 40,000 or 40,000 plus employees in FY26?
So, Sajid, given the fact that this uncertainty people started experiencing towards late February, March, if you look at our order book, okay, the discretionary spend versus non-discretionary compares quite well with Q3. But what we are seeing from the market, I would expect there would be delays in decision making on discretionary spend if this uncertainty continues. But of course, say with yesterday's announcement, we need to see, does it bring in more optimism into the market and makes the decision making cycle faster or at least normal. See, usually in these kind of situations, many of the customers also try to do more cost optimization programs, so that definitely provides opportunity. Like even in Q4, there's been a good mix of programs around operating model transformation, vendor consolidation, technology transformation. I do expect that it will provide us opportunity for gaining further market share.
So typically we don't call out customer specific, excluding margins or what are our margins on a specific customer.
My point was, is there a bump up in margin that's expected now that?
Yes, we have been calling out. So if you do the maths on the third party expenses which we have, and the cost of equipment and software, you'll be able to calculate it. And like we have been calling out the impact in the prior quarters, yes, you would expect as a specific large transformational project ramps down, there should be unwinding of that impact.
Ajit, hiring from the campus is strategic for us. We will continue to hire. I said this earlier and I'll say it again, that our numbers will be similar to what I did earlier or better. With respect to net addition, it really depends on the overall business environment and what we eventually hire from the market, depending on the skill requirements in every quarter. So 13.3% attrition is slightly higher than Q3 on an LTM basis. So is that a worry for you, or is there a market dynamics changing because of it is switching up, or is there a base? It is not a worry. It is not a worry purely for one reason, that our quarterly annualized attrition has come down by almost 130 basis points this quarter.
Thank you. Next question from Shivani Shinde, Business Standard.
Hi, good evening, gentlemen. Kriti, first question to you. You obviously sounded off the US tariff cautiousness in your. Are there certain verticals that we should, see which will bear the brunt of these tariffs? Are you already seeing that when you say, there have been delays or clients are getting, pausing the discussions? And if that's so, which are these verticals that you're seeing? Two, question where Milind can also join in. Two significant announcements in management. The last time TCS had a COO was when N. Chandrasekharan was appointed, and then of course, I'm going back, I know, I'm sorry, but COO is a significantly important position. So just want to understand for the, Ms. Aarti Subramaniam's appointment to that role. To Samir, two questions. CAPEX for next year. Do you see any impact because of tariffs? Do you see in terms of your expansion plans that TCS has? Milind, you are saying you will take a call on wage hikes. Is that should we think that because of this uncertainty, there may be certain delays? Thanks.
Shivani, first from the vertical perspective, as to be expected, like as the uncertainty crept in, some industry you also saw the U.S. consumer confidence index going down. So the impacted businesses tend to be in the consumer retail sector. Retail has been impacted to some extent, and when I say retail, CPG, and also travel, hospitality, that's probably the most impacted sector. And another sector that's been impacted is auto, like because of the tariffs that have been imposed on the auto sector. So I see the maximum impact in these two sectors. Other than auto, manufacturing seems to be still okay. We are banking, financial services seem to be okay. Insurance, there is some softness, but BFS still continues to, the demand environment continues to be good, which is giving us also the hope and confidence for the future. Comms is something that we need to watch out for. Coming to COO announcement. So first, after N. Chandrasekharan, NGS was also the COO. He left only 1 year ago. Okay. See, what we were part of doing our strategy exercise on what are the areas of focus. When we did that, we realized that as there is a significant technology transformation happening, there are a lot of areas where we need continued focus to build talent, build partnership, and hire more, gain more, strengthen the talent pool available, because some of the talent pool we cannot depend only on homegrown talent in these new technologies. So we thought that there is a lot of focused activity required to drive growth and sustain the leadership in these new technologies, and therefore by that extension drive our strategy. So then we were looking at what are the leadership options and bandwidth available. We realized that it's important that we add to the bandwidth of leadership that's already available with us. Aarti knows, I know that how many of you know, Aarti was with TCS before. She knows TCS quite well. She's been part of the TCS board. Also at the same time, being part as a chief digital officer of Tata Group, she has extensive experience in how the businesses run and how businesses adopt technology. So we thought it would be most appropriate for us to have someone like her as a COO, and the Tata Group has been kind enough to let us have her with us. So that's a background.
Shivani.
Go ahead.
Sorry. Shivani, yes, I think because of the uncertain environment, we will decide on the wage rise during the year. It can be any time, but it will really depend on the environment.
Question on capex. If you look at this year, our capex was significantly higher than the previous year. We did approximately 5,000 crores in capex compared to about 2,700 in the previous year. In terms of investments continuing into the next year, we don't plan to scale it down. Investments in talent, in innovation, infrastructure, or partnerships. Currently, there are no plans to scale any of them down.
Next question from Ankur Mishra, ET Now.
I wanted to understand from you your presence in North America, which you talk about over year-on-year basis. From about 50%, it has come down to 48% or so. I want to understand what is your strategy further. Do you plan to continue to maintain this kind of geographical presence, meaning the focus on North America? Is there a rethink on that? And how has been the quarter, particularly in terms of performance from that region? You have mentioned, Samir, about 26 to 28% margins. But is there any timeline you see, when you are going to achieve that, and what gives you confidence for that? Milind, I want to understand from you the attrition rate. Are you comfortable with that, or you see it as a challenging thing?
So Ankur, from a North America perspective, it will be a main geography, almost like a home market for us, a foreseeable future. Okay, because there are large enterprises that invest in technology a lot, and we find there's greater opportunity for us to participate in those technology transformation. For the quarter, we did grow marginally, but 0.2% on a Q-on-Q basis. As I said, all major markets grew for us. What you see as going down to 48% is to some extent India geography also having significant growth. So because of that, you find some market share move from North America to the rest of the world. So that's a shrinkage, but I don't think otherwise our focus on North America will continue.
And given the overall certainty which currently prevails and the dynamic nature in which things are changing, it's difficult to give a timeline in terms of when. We have executed it in the past, so we are well confident in terms of how we can achieve it. What gives us confidence in terms of are the levers which you talked about, the operational levers, whether it is in terms of productivity or realization, going for a better pyramid mix, or the improvement in revenue mix also can help.
Ankur, attrition has inched up a bit from 13 to 13.3 in this quarter. But we are okay because our quarterly annualized attrition has come down this quarter by 130 basis points. So we should be okay.
Dibangana Ghosh from Money Control.
Hello. Kriti, my question to you, wanted to understand how is the impact of AI playing out in the discretionary spending part? Because in the industry, we have started hearing that companies are trying to provide productivity gains to the customers. So, and also the deal tenure and deal sizes are coming down. So wanted to get a bit of understanding on how it is playing out for TCS. Samir, on the basis of that, will passing on productivity gains from AI impact the margins in the short term? And Milind wanted to understand, there were some reports on the TCS considering wage hikes in single digits of 4 to 8% or so. So if you could comment on that.
Sure. AI plays out in two ways, right? There are projects which we call AI for business. These are all transformation projects. In fact, for one of our large clients, recently we did a project where they are in the movie making business. We are able to use AI to read the script, find out which are those scenes where are dangerous, where you need special license to take, which are the scripts where the property branding could be enhanced. So there are a lot of opportunities in AI which previously you would have done in a manual way, and maybe you've taken more time, and maybe may not have been accurate. So it creates two sets of projects, AI for business as we call it, and then AI for IT, which are primarily software engineering projects. So the deflation